Inflation is here to stay. The Fed has been underestimating inflation. It should be obvious, but somehow they don't know it. But they have underestimated, and now they're changing their tune, all right? They're saying that it's no longer transitory, and they're planning for 3 rate hikes in 2022. But I have a feeling, I predict that they're going to need much more than that. We're going to discuss about all that coming up after the intro. What's up, guys? My name is JC and welcome to the Wealth Engineering channel. I create content to motivate millennials in increasing their net worth, retire early, and build generational wealth. And how do we do that? We do that through stocks, real estate, business, and cryptocurrencies. And if this is something that interests you, make sure you hit the like button, subscribe, and click the bell. Now, why are we even talking about inflation today? Well, guess what? Inflation is something that can actually affect the market. It is correlated that the stock market, whenever the inflation gets higher, whenever we have to increase rate hikes, it also affects the stock prices. And the higher the rate hikes, the lower the stock prices. All right. So this is something we have to keep in mind and understand how this small move can have a big effect on the macroeconomic globally and how it could affect stocks and definitely our cryptocurrencies. All right. So we're going to talk about all that. For those who don't know, I actually do a podcast called Wealth Engineering Podcast. And this is something I talk a lot on my podcast. I made a stream about currency versus money. I'll put it right here so you could check it out. I also made a debate about why I believe the US dollar will crash. So I'll also link that right here. Make sure you check one or any two of these streams right here, because there's a lot you need to know about how currency is made, how it currently circulates, and the economy. And things like this is very important because essentially what the Fed is doing is they're controlling the flow, right? How much money is being printed or retracted from the economy. All right. So they control the flow of money. And with that comes a lot of power, a lot of responsibilities, and yes, stimulus package as well. But also inflation. How inflation affects us is we have to pay more for the things we want. But it doesn't mean our income is rising at the same rate as inflation is rising. All right. This is why we got to think about it. And for anyone who understands macroeconomic, this is something that was obvious, especially last year when you realize 40% of the entire circulation of money circulating was printed only last year alone. So that alone is a factor for inflation. But you also have the supply chain. It's becoming very hard to ship because of the COVID-19 pandemic and all that. It's actually very hard to ship things from other countries. There is a slowdown in that, so it takes longer for us to receive our goods, and the demands, it keeps rising. So that creates a problem. There is also a problem shortage in labor, right? Many people, we call it the Great Resign. Many people are quitting their jobs. Many people are actually making more money via the stimulus that the Fed has to do to keep up the economy, as opposed to going out there and create value. So you have less labor, you have less goods, and then the goods that are currently here are also being increased in price. And on top of that, you have more money in circulation. So you have more incentive to raise the prices, which this is why I believe it's only the beginning. All right. According to CNN Business, the Fed hints at multiple rate hikes in 2022 to combat inflation, right? We have seen this before in 1971, where, hey, Nixon wanted to break the back of inflation, all right? So here we go again. And I think this is going to be the theme for this decade. We're going to see a lot of this discussion about inflation. We've already seen gas prices going up. So this is just the beginning. And I think that's going to affect the stock market as well. All right. So let's just jump quickly on this article right here. It says that the rate hikes are coming. The December policy update also includes a summary of economic projection, the so-called dot plot. So I went ahead and opened this document right here. And I found this document right here where it's actually a graph that shows 2022, 2023, and 2024, and it puts a dot on where it's expecting the rate hikes to be. So we're talking about like 0%. We've been there the entire year of 2021, very low, very close to a 0% rate hikes. And then they were expecting somewhere in 2022 that we might see anywhere for 0.4 to 1.1 in terms of rate hikes. And they're expecting to have at least 3. So we might see 1, 2, 3, and then it might land somewhere very close to 1%. All right. So they're going a lot more aggressive, and I actually think they might end up doing 4 rate hikes. So they're projecting 3, but I actually believe they might do 4 rate hikes once every quarter of 2021. All right. Then they're saying that by 2023, they're projecting that they might reach close to 2% in rate hikes. All right. So this is going to be interesting. Will they be able to actually reach this? I think not. All right. I think by the time they start raising the rates to 2%, they might create a huge economic crash, and now we're heading towards the checkmate situation for the economy. Because look, if they do not raise the rates, right, they're going to have more inflation. All right, more inflations are coming, and people are going to take the streets because they have to pay more. So they have to raise the rates. But if they do raise the rates, the market, especially the stock market, might crash too fast, and that could create another problem where, hey, people are losing their jobs and they have no money to spend, and on top of that, you have the price increases. So we're heading towards some troubled times. All right, winter is coming and it's very close. All right, so you gotta, if you haven't done so already, you should really consider putting your money out of the stock market right now. I'm not a financial advisor. This is not financial advice, but you got to study history. You got to study what's going on. We've been pumping the market for a very long time. Why? Because the interest rate was very low, very low. Now in 2022, the Feds are saying that they're going to increase the rates very high, aggressively. And we might see they're projecting to increase the rates even higher in the next coming years. All right, so get ready for this. All right. So Fed officially now predict the central bank benchmark interest rate to rise to 0.9% in 2022. All right, up to the 0.3 expectation from September. To investors and market watchers, this suggests that there will be 3 rate hikes next year. So far, market expectation for interest rate increase are really picking up in May. Interesting. Potential economic fallout from the spread out of the Omicron variant hasn't yet changed the Fed view, but hey, this is also a very important point. What if this variant becomes as equal as CV-19 when it was March and April? What if we have to do another lockdown, right? So this could be very interesting, because now we're going to have more pressure on the economy, less product being produced, businesses cannot run properly, they're locked down. On top of that, you have the inflation rate. You have to fight it off, right? So even more challenges. So I think, guys, all this pressure might prickle that bubble that we've been having for the last 10 years. But despite all the rate hikes that we're going to see, they're even saying that, hey, but inflation might stick around too. It doesn't matter, right? U.S. inflation still has not come down from its height. Last week's consumer price inflation report showed prices has risen to a 39-year high over the 12-month period ended in November. Wow, guys. So this is we haven't seen numbers like this for inflation in 39 years. So that was before I was born, was the last time we saw inflation rates like this. And this is just in 1 year, right? Wait until we see what's going to happen next year with all the money that's been printed when the rate was so low to stimulus package to fight the CV-19 lockdown, right? And all the labors that we've been losing since, right? There was a time it was like 40% unemployment rate in the US. So you got to take factor into all that. That really stopped the economy, and now we're feeling the impact of all that. We're starting to feel the impact of all that, but I predict it's going to be more and more. Powell says one of the reason the behind of move today is to put us in position to deal with inflation. But honestly, I don't think there is anything you can do. They've already printed too much money, and they have no choice but to print even more money because we have many things coming. We have the Omicron pressure, right? We have a situation where if we start raising the rate hikes, we might crash the market, which will be even more devastating than just than inflation. So I think the Feds will actually choose. They will try to raise the rate, right? But by the time they reach to the third rate, they will actually have to let inflation skyrocket and deal with that instead, because I don't think they have the balls to trigger the market and crash it down. But I think regardless of what they do, the market is due to crash, all right? We have been pumping in the last 10 years and up. It's time to correct the market. And this is where I'm saying start looking into crypto, guys, because crypto might do very well. All right, crypto might do very well because the stock market won't do well. Now, there is always this whenever the stock market crashes, crypto crashes at the same time, but it recovers very fast, very, very fast, as opposed to the stock market. And I think whenever that happens, a lot of money from the stock market will transition to the crypto market, and that's what I'm predicting. All right, so I think the Fed will actually be trying to raise rates. We might see 3 rates. I think they might even push for 4 rates. All right, but by the time we end up in 2022, I think where the Fed will reach a position where they're going to choose to let inflation rise as opposed to crash the market. And in that decision, they'll end up having both. They'll end up having inflation going higher and the market crash, right? So I see a lot of doomsday scenarios for the stock market, for the economy as a whole. In general, we have many indicators that are triggering that we may even see a financial crisis in the world, like a world financial crisis. So we have many indicators we have one indicator, the inverted yield, that's been triggering. I shared a video of that on my Discord. So with that said, guys, make sure you check all this out. And again, make sure you check the streams, all right? I'll leave a stream somewhere here. Make sure you check the streams about when we talk about currency versus money, or the debate we had a nice debate about the US dollar. Would it crash? Inflations and things like this will definitely make this a reality. With that said, guys, thank you for your time, and we'll see you on the next one.